All right, let's go ahead and get started. Welcome to the stock market review for our yummy subscribers and guests. Great to have everybody here. The recording of this will be posted in two places. One is on our YouTube channel, so hopefully you guys can subscribe there. It's free, so it's pretty easy. And then the other place is in the client VIP area where you log in with a password. We like to also post it in there, so whatever works best for you, that's where the recording is, and we are recording. All right, so today is January 17th, 2024, middle of January of the first year. And my name is Bennett McDowell with TradersCoach.com. All right, so let's go ahead and take care of a few administrational items here first. And can everybody hear me okay? Hopefully everybody, let's just do a quick audio check, make sure everything is good. That looks like it's good. Okay, excellent. All right, so first thing I just want to go over are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really do go hand in hand. But we want you to be aware of the risks, and there's really many different types of risks when you trade in the markets. So focus, we find it best to focus on two major parts of that. One is market risk, and we handle that by basically funding our trading account with money we can afford to risk, called risk capital. The other type of risk is the trade risk, and this is the risk on each individual trade that we take. And we, of course, handle that by adjusting our trade size based on our account size and where our stop loss exit is placed when we enter the trade. So we cover that in many books that I have out there on that, and I'll get to that in just a moment. And then finally, if we look at any stocks, or I give you an analysis based on my analysis, which is my opinion of what I think is going to happen, I use Elliott Wave. I use different forms of technical analysis. I do not use fundamentals at all. All right, this is basically technicals. And run any of my analysis or suggestions on stocks or anything past your financial advisor or whoever manages your money to be sure they're suitable for you. I don't know your personal situation, and let's hopefully, certainly they should know that. All right, so definitely run that by them. All right, a couple books I've written. Money Management for Traders on the far right. Traders Money Management System will cover what you need to know on the risk control front. My new book, The Art of Trading, being published by Wiley Publishers, is coming out this year. I think that's going to be the best book I've ever written. I put a lot of effort into that, and there's a lot of new information in that book, and you can pre-order that at any time on our Amazon page for books. Elliott Wave Techniques is a book published by McGraw-Hill, and I wrote that to basically simplify the process of coming up with a high probability Elliott Wave count. So you can check that book out. Survival Guide for Traders is one on how to use today's technology to run your trading business just like a professional hedge fund does. And then my Art of Trading original book on the far left there, again published by Wiley, came out in 2008. So definitely time for an update on that. All right, so Wednesday, let me just go over quickly the economic announcements before we get to the actual charts today. And first thing, of course, every 7 a.m. Eastern time, we have the mortgage apps coming out. Then we followed by retail sales today, import and export prices. We've got industrial production, business inventories, housing market index, beige book, and a bunch of speakers, but no FOMC today. All right, Thursday, January 18th, housing starts coming out, jobless claims, Philadelphia Fed, manufacturing index, EIA natural gas report, EIA petroleum status report, and the Fed balance sheet. We end the week with existing home sales, consumer sentiment, and Baker Hughes weekly rig count. And let's see what else we got cooking. Treasury, international capital. All right, so I don't really see anything there that's going to throw the market for a loop. Right now, the market's pulling back because of the big run it's had up really since October. So I would almost classify that as a profit-taking run at this point. All right, so in terms of software, when we look at charts, you're going to see maybe some software if you're new here that you haven't seen before, and that's our software. We have something called the Applied Reality Trading System, called the ART system, and we have indicators along with that, scanners, and of course, risk control software. So what I tried to do in providing these tools is give you tools that basically handle the major issues that you may encounter when trading the financial markets. In other words, you can have a great system, but if you don't have risk control, you're kind of missing part of the pie, so to speak. So you have to have good risk control. You have to have a way of finding stocks. That's our scanners. And then you have to have entries, exits, and stop loss placement and trailing stop loss placement. And that's where our charting software comes into account. So all that rounds out to what I call the ultimate trading system, because we don't focus on just one aspect. All right, so here we are. And good morning to everybody out there. Okay, so here's my latest chart on the Dow as of Sunday. We're going to take a look at the current chart today. But because we broke above the old high back here in 2022, all right, we are now had to adjust the wave count to where this is an Elliott wave 3 for those Elliott wave folks out there. This is a 4, and now this is the target for wave 5. Now, if you're not familiar with the Elliott wave, basically there are 5 waves in a trend. So we assign, numbers to the different waves, whether they're going up or correcting and so forth. And when you get to the end of wave 5, that marks the end of the trend. And it's usually a target zone based on a fib extension. And so my target zone right now is 40,141 up to around 47,238. So it could end at any time in that zone. And the question then is when? Well, probably latter part of 2024, I would say. We're going to have to wait and see. We're due for a pullback, and I'm going to draw what I think is going to happen on that pullback here. And I'll show you a little bit more detailed on a smaller time frame. But here's this big run up that we've had since October. And so it would be, if we drew Fibonacci retracements in here, we're kind of looking at a pullback zone somewhere in there. And I'll give you the exact numbers in just a bit. But that's kind of where we expect this thing to pull back at some point. Now, does that mean it's doing it now? Maybe, okay, because it is pulling back a little bit. It could make one more quick little high before it pulls back. So we're kind of watching that pretty closely. But I do think probably a pullback is in the cards and a temporary pause as we work our way up to that wave 5 target zone. So this is kind of what I anticipate, some type of pullback here, and then another spring up, maybe another pullback, and we finally get into wave 5. So how long that takes depends really, I think, on the severity of the pullbacks. For example, we've had a big run up here since October. This pullback could be shallow or deep, and depending on what it is will depend upon how much time it takes to complete the pullback. So it kind of makes it a little difficult to anticipate at this point how long it's going to take until we get to that target zone. My guess is probably the latter part of 2024. All right, I'll leave it at that for now. So any pullback, I think right now, what we're expecting is that to be a profit-taking pullback, and we should see more highs to follow after that completes. Now, if we're wrong, we always got to account for the possibility of being wrong, right? When are we going to know we're wrong? Well, probably when we take out the low of this. So instead of doing this, if it keeps on doing this and heads below here, then we've got to take in the possibility that this could be a failed 5, wave 5, and it's over. Okay, so that's always a possibility. Usually that doesn't happen. It's more the exception than the rule, but we'll keep an eye on it. And if you come here every week, of course, we'll let you know what's going on in that. So that's the daily chart with the target zone. And if you have any questions on that, feel free to ask. All right, here's our 60-minute chart. Now the 60-minute chart, I've drawn in the profit-taking pullback zone. And this is as of Sunday. If the market turned around and made another high, I'd have to redraw this zone, and it would probably inch up a little bit, okay? But for right now, I think that high here, okay, that was put in, looks like last week or the week before, is holding, okay? So we'll see. We'll take a look at the live charts in just a moment, but I don't think there's been any positive pressure to the upside to take that out yet. All right, so this profit-taking pullback zone, I've got between 36,315 now down to 35. 365. So that's a high probability area. How high? About 70%. All right, so 70% of wave fours go into that area. Now, if it's a briefer pullback, 15% of the time that happens, okay? And we may see an end at 36,902 to 36,315, or if it's a little deeper, all right, 15% of the time that happens as well, as long as it doesn't go above wave one, which is this area here. So I'll try to draw a straight line. Okay, I'm doing this freehand, but you get the idea. So it has to go below that line for that not even to be a wave four at this point, or a profit-taking pullback zone after this big, impressive, impulsive wave. So if it starts to do that, we'll start to keep an eye on this area down here, because if we go below this area, all right, that indicates we may have that failed wave five. So we'll keep an eye on that. Again, I don't think that's going to be the outcome on this. All right, here's the S&P 500 as of Sunday as well, working its way up also to the target zone there. So I don't anticipate this not getting to the target zone, but I do anticipate profit taking in the S&P 500, just like on the Dow. And also too on the NASDAQ, we have the target zone as well. And the interesting thing about the NASDAQ is we have not yet taken out the 2022 high. I do anticipate that happening, and if it doesn't, and the market sells off from here, then of course that will affect the Dow as well, and we'll take out that bottom there, and then that will change things. But again, I'm expecting more highs on the NASDAQ, at least through the middle of this year. All right, after we get to the target zone on the Dow, we get to the target zones on these other indexes, then we got to be really careful, because at that particular point, then we've ended a major move up in the markets, which we thought had ended in 2022. And so then we're going to have to poise ourselves once again for a major correction, not a little one, but a major correction to the downside. So that may be what's in store for us later on after we reach these target zones. But we'll talk about that at a later date once we get there. All right, any questions on that? All right, I want to cover the housing market a little bit here. This is a great graph. I show it every week, and I update it every week to see what the latest is. And this is the Case-Shiller Index versus the CPI. And so the Case-Shiller is here in red, okay? So that's marks the average home prices based on his index. And then down here is the CPI measuring inflation. And the bottom line when you look at this chart is anytime housing gets extremely far away from the CPI index line, you're usually at some form of a bubble. And this was back in 2008 area, okay? And notice that that was the financial crisis, and we were really spread pretty far at that particular point. And then the market, sure enough, corrected. All right. Then after the correction, you get a rebound. So corrections are actually good because they erase the bad debt, and then from the ashes, you're born again, so to speak. Right. So that's the situation that corrections provide for us, and they're necessary in a free marketplace because things get overdone. People take unnecessary risks or risks they shouldn't take, and the market then penalizes those people based on the correction if their timing is not good on that. So that's the free market. You're either right or wrong, right? So in 2008, the market corrected. We had low interest rates, and then of course it started correcting. Then we had COVID back in this area here. Interest rates went to just about zero. Money was very affordable, and the government was giving money at that point out, and everybody was moving from the cities at that point to the suburbs because they were working from home and wanted to get out of the cities based on the COVID situation. And so the housing took off there again. Then we had a little blip last summer, and now it's back up. And, you know, there's many theories, you know, supply is low, and you've heard all that stuff and that argument there. So we're still bubbled, okay? And look at the distance now from the CPI compared to 2008. Wow, right? Almost double. All right. So we're probably, if you believe that history is any teacher of what will occur, if you believe that, then you also need to believe that the Case-Shiller Home Price Index will at some point revert back to the mean. In other words, housing will come back down to a level that represents a more normal diagonal compared to the CPI. And that's going to be about 40 to 50% in order to get down into, these areas here. Now, notice also, though, that the CPI, because of which measures inflation, also bumped up. So that helps close the gap a little bit, but housing also went up, okay, a lot. So you still got the same amount of gap, even though the CPI has kicked in as well. All right, so again, I think it's not a matter of if, I think it's a matter of when the correction will happen, and maybe it will happen when the market happens, or maybe it'll lead the way and then the market will correct because of the housing problem. Maybe we'll go into a situation where there's more layoffs, people lose their jobs, have to sell their homes, increase supply, and then of course decrease prices of homes. So hard to say exactly what the catalyst will be. I will tell you one thing that looks like, based on the Fed watch, that interest rates will be coming down, and some people think they'll be coming down in March now. It's increased much higher in the last week even, that rates could be cut as early as March. All right, originally it was May, but it could be March. So we'll see what happens with that. The market is anticipating that. The stock market is anticipating that. Housing recovery somewhat is occurring and is anticipating that in certain locales. So we'll see what happens with that, because if it doesn't happen, then that's going to cause a problem in the markets, both housing and also in real estate. So we'll see. This is also a great, let me just enlarge this so you can see this a little bit. This is a home value to income ratio. And this is actually a chart I took from RE Venture Consulting, which does a nice job on this. And basically on this chart, instead of using the CPI, they charted home prices versus people's incomes. And this is just showing that when you have a reddish area, okay, and here's 2008 again, all right, and here's the really red area, which we know is worse now, okay, you have a situation where it's red, that home prices are way extended above incomes. In other words, making them unaffordable, especially to first-time home buyers. It's one thing if you live in a home and can sell a home for a lot of money that you've been in for a while, and you can roll that into buying another home, then you can afford these higher prices because you're taking the money you got from your home and rolling it into the new home, making it affordable. But for first-time home buyers, not the case, all right? They don't have that. So it's a problem, all right? So renting is obviously in a situation where there's fairly strong demand for renting at this particular point. But also, too, we're starting to hear from the banks a little bit that, we're having defaults on credit cards is increasing. In fact, if you look at the Bank of America statistics, I think they have doubled in the last 2 years on loan defaults, okay? So it's 984 trillion or billion or whatever they mark that, compared to what it was 2 years ago, has doubled. Okay, it was 400 or something, maybe even less. But so there are some cracks showing in the economy, and those the problem with defaults is not only in credit cards, but it's also in mortgages as well. And if you get that, then you're going to increase the supply of housing if people default on their mortgage, whether they want to or not. Okay, so got to keep an eye on that as well. If anybody has any other information on that, feel free to, of course, share that. All right, so those are the tables and the charts I wanted to take a little time and go over today. And now I'm going to go ahead and minimize this. Let's take a look and see what the Dow has done so far this week compared to those charts I showed you. So on my setup here, I have 3 time frames. I have the 60-minute, all right, which is showing the pullback area. This is where profit taking, I think, is heading. And I've also put that basically on here roughly, okay? and then the beginning of the target for the final push up at some point. So it looks to me like, we've got, in terms of our indicators, I'm going to open up this 60-minute a little bigger so you can see it better. But on this particular chart here, all right, it looks to me like we're sitting inside an area here, probably now where we're heading down here, because we have a red owl. All right, 1, 2, looks like a 3 top here. And actually, I probably should draw that a little bit more accurate. Get that up there. Okay, so it looks to me like we're starting to enter into that profit-taking stage. It looks like, the pyramid's been stopped out here, so any long positions, you'd be out by now. Looks like here we've dipped below this area here recently, all right? And so that's kind of a key thing to keep an eye on. That's taking out a key level of support. Let me just, before I do that, let me just draw a horizontal line here. We haven't taken out this low here, so let's keep an eye on that. And that low exactly is 37,073. So if we get below that, then we're on our way, I would say, pretty definitive down to that profit taking. We still technically could recover and make one more high here, but it looks like it's beginning right now to go into the correction series. All right, so that's kind of where we're at now. All right, so again, after this correction, I would expect a rebound and get back to around 40,000 at some point on the market. I don't think we're done with that move up. All right, so that's kind of where we're at now. Take a look at the NASDAQ real quick. And the NASDAQ has got a green PTF here for those of you familiar with our indicators. So I'm not so sure, okay, this actually did correct here. We may be going in for one more quick high on the NASDAQ as compared to the Dow. So we'll keep an eye on that one. But S&P 500, similar thing as the actual Dow Jones. So there you have it, okay? All right, so the other thing I want to look at is cryptos here. We're thinking cryptos are due for some type of pullback here, just like on the Dow. And I think we, very similarly, maybe starting to head into that. The 60-minute chart on the crypto market here is indicating that. I'm very bullish on cryptos long term, but I think probably we're going to work our way down to 33.81, give or take a little bit, and $27.80. So I think we got a little bit of a move down simply for profit taking. All right, for those people trading shorter time frames than you may be trading, they're going to take profits on this swing down here. So I do think there'll be a tremendous opportunity in Bitcoin to load up again when we get here. But don't just buy in here. Wait for the reversal to come, okay? You want to make sure the market hits the target zone on a pullback, and then you have more buying coming in before you just jump in. Because you don't want to catch a falling knife, so to speak. Because, you're not sure how far in the target it's going to go, and then there's got to be points that you assess where your forecast is just plain wrong, okay? And if we go below this area here, then we're going to have to look at that to see. So wait for it to correct, wait for some positive pullback, and wait for a new trend up. So if we come down here, wait for that new trend up, higher highs and higher lows, and then look for an entry, and then I'd load the boat, okay? But again, run that by your financial advisor, but that's my strategy on that. Long term, okay, I think this is going to just take off, all right, even if the market gets bad in stocks, all right? So I think you're okay from a long-term perspective. If you're holding it and not worrying about a pullback, you need to have your stop under that fib retracement by quite a bit, all right? I would definitely put it under this mark here just to be able to withstand, all right, any significant profit-taking pullback. All right, and Coinbase is no different, okay? Coinbase has corrected more severely than Bitcoin, so it's come back into the target zone. We have a red owl here, and we normally usually get a statistical norm, at least 4 bearish histogram bars, all right, during a change in color like this. We've got a red here, so it's still not done going down. So let's let this thing finish, and then I think you can load the boat on that. Let's see, blockchain mining, same type of thing. So this one's come down a lot more. It's a little bit different configuration. It hasn't taken off quite as much as Bitcoin and Coinbase. So it's kind of in the infancy of the move up. So sometimes you see bigger corrections on that. So again, stay out of this until we see some buying coming in, and it's not coming in yet. All right, so don't go in here until we see a reversal on that. We'll take a look at those every week, of course. All right, let's take a quick look at USO, and then I'm going to take a look at gold and silver. And if you have anything you want me to look at, I will be able to. I've got a few minutes left for today. All right, so on USO, we're watching this bottom on the weekly chart. So let me just pop this open for a minute, magnify this area here. And on the USO chart, this bottom for any long positions got to hold. Okay, if that gets taken out, you got to exit the market if you're long. So we expect that to hold, but we are coming down. All right, and we expect if this holds and we get a reversal at some point here, our target on USO is around 99 to 124 before the next moderate top will occur. Now, notice we've had the 4 histogram bars down here. You can get more, but we've met the minimum. So hopefully we'll see a turnaround here pretty soon. We're not really seeing it on the 60 quite yet, even though we've had a little bit of a basing here, got a little bit of a channel here. So it'll be interesting to see even if this bottom holds here, and it might, okay, that would be nice, but we have to have a move up here to confirm that. We've had an awful long owl here with bullish divergence. Well, not really. You don't have bullish divergence there technically because this isn't lower than that, but you do have it getting closer to the bullish line. And so we'll see if we get a pop here indicating a possible bottom is in, and then that will be higher highs and higher lows. So we'll keep an eye on that. All right, gold. Gold pulling back a little bit right now. Again, I think if you're holding these positions, you can continue to hold them. For short-term traders, they probably would be looking possibly to get out of the market at any time, if not out already. Long-term holders, you'll probably see more highs in gold after this pullback. All right, silver. Now, silver is one we kind of wanted to watch because we had a pennant forming here on the weekly chart, and we're kind of now back in the bottom part of the pennant, and we're kind of channeled. So it's kind of a messy market in silver. I don't think you need to be in a rush to get into this, and I would not get into it. I would wait at this point until we get a more bullishness coming in and break out of this channel that we're in, okay? All right, so that's kind of the deal with that. TLT, which is the bond ETF, is worth looking at here. And this is one here where we're starting to see a pullback after a move off the bottom. Now, my situation with this using my software tools is this is telling me the bottom's not in yet. So whatever you do, any long position here is probably going to make it maybe to here, and that's about it before you see more selling. So we'll see. We have gone up, profit taking, one more leg up, and then we may get a move down if this stays red over here. So I'm not long this. And again, you know, the PTF saved me from this bottom here. If you remember, we had a pretty big bottom in November of 2022. We had a nice rise off here, red PTF, and then it took out the bottom. So I was glad I didn't get sucked into a long position here. So that's kind of the deal with that. So I think probably maybe this is the last hook down. If we get one more hook down, I think TLT will be a really good buy at some point, but I have to wait until my tools are more positive than they are now on that, okay? All right, so that actually we're at the end of the session. So that's kind of it for today. If you have any questions, feel free to ask. We'll be back next week with any updates on this. But I would expect a pullback in the market at this particular point, okay? All right, Marone, let's take a look. NMM, let's take a look at yours real quick here. Now, if you have any stocks, like a lot of them, you want me to analyze, We have a service on Friday that's free at YouTube called Stock Analysis Friday. Starts at 8 a.m. Okay, Pacific time, and we're there for an hour, hour and a half, and we basically look at all the stocks anybody that's there wants to look at. We always walk away with probably a handful of really good stocks. Okay, so that's an excellent place to look at. All right, so let's see. Planning to go long. All right, so let's take a look at this. First thing you want to do is let's see where the target could be at this. It's kind of a messy market over here. In terms of Elliott wave, pretty difficult. Let's see what we got coming down here. You do have a bottoming here, but look how long that's been bottoming since 2017. You don't have a break yet above this particular resistance level, and so I'm a little bit cautious in terms of that. Now that's around 40 bucks. Okay. So, you're at 29.30. So, there you have it. Looks like a few more highs here, but you see the PTF here, Marone, is indicating only a high above here. So that's not enough for me to take a PTF scalp trade. And we have a little bit of bearish divergence building in here. So I would not go long here. Again, wait for the pullback and we'll take a look at it again. I think you're going to get one, and I think if you went long and put your stop at any place that makes sense for an active position trade, you probably might get stopped out on that. Okay? Sure, of course. All right, Frank, you're still short IWM. Let's see how you're doing with that during this pullback. All right, so you're in pretty good shape there. You're at the target, okay? So you got to be a little careful in here in case this thing hits the target and then rebounds. So what I would probably do on this is if this goes green here, I'd scale out of some things. You don't have if this goes red, I'd hold it, but it's not red yet. But if it goes down violently any further, it will probably turn red. But at this particular point, you may want to put your stop right here, okay, in case this correction catches you off guard and recovers. Otherwise, I'd start taking profits when this turns green, especially since we're in the target, okay? Very good. All right, so we got client support coming up in about a half an hour here, okay? So I hope you can make that. And of course, that's for all our clients. And if you have any questions on any of the home study courses or any of our software, feel free to come and ask. And I hold all those personally myself. So any questions you have, you can certainly come and ask there. All right, so that's it for today. All right, we appreciate everybody subscribing to our Yummy service. And we hope this is certainly helping you. And we will see you back here next week. And Jean, I'm going to turn it back over to you.
Terrific session. Great to see everybody here. And if you happen to join us a little bit later than the beginning, you can watch the recording on YouTube. So it's the traderscoach.com YouTube channel. Be sure to subscribe to that. And also on the YouTube channel, we have Stock Analysis Fridays every 8 a.m. Pacific time on Friday. And it's live, and you can bring your stock picks and guaranteed to pick up a couple of extra picks as well from all the other great folks joining in. So hope you're all having a great winter. I know it's cold out there in some places. Ellie, I saw it's kind of chilly where you are. And stay warm, and we'll see you next time. Have a great day.